don't trade when price is in a range, right? Many people don't trade when price is in a range. A lot of traders does not trade when price is in a range. So we are going to be focusing on the two major trend of the market, which is uptrend and downtrend. Uptrend and downtrend. So these are the two major uh, category that we are going to be focusing on. Why? Because this is what our strategy gives us. This is what we trade, right? We don't trade when price is in range, right? So in this market structure trend, right, in this uptrend or downtrend, we have what is called structure being printed in the trend of the market. And I usually say this: market can never just push up in a straight form, neither can markets just push down in a straight form. It doesn't happen like that. Markets can be in an uptrend at the same time. It's never up, rather it moves in structure. Though it's in an uptrend, but you always see things like this. It can't just go straight up, because if price does go straight up, everybody will be making money for trading. Everybody, everybody. But because price tends to form structures, and these structures, everybody sees it in different ways based on their understanding, right? So here we have an uptrend market. The market is trending to the upside. And here we have a downtrend market. So what I want us to understand today is the concept of what we have, or what we know as change of character, which is change in market trend. When market is in an uptrend, how do we know that this uptrend is no longer valid, or this uptrend is coming to an end? How do we know that this downtrend is coming to an end, or this downtrend is no longer a downtrend move, right? So these are the concepts we are going to be looking at in the next few minutes. So quickly, if market is trading to the upside, what we expect price to do is to be breaking structures, right? We expect price to be breaking structures to the upside, which is we have break of structure, we call BOS, break of structure, BOS, break of structure. And for us to validate or confirm that yes, price is still in an uptrend, we are not expecting the market to take out any of the low that caused a break, right? This low, this low, this low, this low. For us to be sure that yes, price is still in an uptrend, we are not expecting market to come back and take out this low, right? This low ought to be there for us to know that yes, price is still in an uptrend. So hence price is breaking structures to the upside, right, and is maintaining these lows. Then we are certain that yes, price is still in an uptrend. But once we get a move where price then tends to break the low, which is this low, market has automatically violated the trend. And there are two reasons or two things that can cause market to violate the trend. One is either is manipulation, or it's a change of character. So when it's manipulation, it's always weak. So if it's manipulation, it will take out this low, but it will not close. The candle will not close. Rather, it will wick back and continue to the upside. But when it's a full market trend change, right, the candle is going towards body close. Sometimes you can even see it sell all the way here before then trying to go back up. So this is what we call market structure shift, or change of character, or chalk, or change of market trend, whatever you want to call it, right? That for us to validate that market is still in an uptrend, we expect price to only break structures to the upside and not take out the low that caused the previous break of structure. Let me quickly admit somebody. So this particular low, let me mark this low here, and this high, until price, okay, let me just quickly clear this and use something else. If price is in an uptrend, this low is very important to us. And this high, where price got to before started retracing, is also very, very important to us, right? So this low, you can mark it and then mark this high as your trading range. That will become your trading range for as a day trader, right? So what are we anticipating? For us to be sure that this market is in an uptrend, we want to see markets reverse from here and start going to the upside. If price peradventure takes out this low, that means we're no longer in an uptrend. Price is either being manipulated or the trend is about to change. So for us to validate that price is still going up, we want to see price do what? React from here and continue to the upside. And how do we spot this? First of all, you need to understand that before price starts moving to the upside, if you go to a lower time frame, you will always see a market structure shift on a lower time frame. So remember, price is never going to drop straight, but rather you see price drop this way. Price will just keep pushing up and pushing down until price is never going to drop straight. Always have that in your mind, right? So let me quickly delete this. So this is what we are looking for. On a lower time frame, this is what you are going to see. This is what you're going to see on a lower time frame. But on a higher time frame, what you're going to see is this is what you're going to see on a higher time frame. Right? But on a lower time frame, this is what you're going to see. And for us to know that, okay, price is actually going to continue in a trend, we are anticipating price to give us a structure shift on a lower time frame to know that, okay, at this point, because if price is coming down from here, you don't know where price can get to and continue pushing up, right? But how you are going to be able to spot where price is going to stop and start pushing up is where price gives you a structure shift or a change of trend on a lower time frame, right? So on a lower time frame, you are going to be seeing something like this break of structure to the downside, or let me zoom out so that for those of us that are using phones, so that you can see very well. All right, so we're going to be seeing this break of structures to the downside. And remember, for us to validate that yes, this is still a downtrend, price is not expected. For us to validate that this is still a downtrend, price is not expected to take out any of these highs. Remember, this is on a bigger time frame. This is just a retracement on a bigger time frame. Remember, but on a smaller time frame, it gives us structure, and we are not expecting price to take out these highs. So whenever we see price now violate the principle of market structure, taking out this high, it has given us a change in market structure on a lower time frame. So once we spot this on a lower time frame, the next thing we want to find out is market in a demand zone? If price is on a demand zone, then we are good to go. If price is reacting from our demand zone and we got this market change of character, the next thing we want to see is once we have seen price break above this last low, right? The next thing we want to do is on that same lower time frame, probably 15 minutes, we want to mark our demand zone on that 15 minutes. From that 15 minutes time frame, we then want to take our trade entry from that 15-minute zone, putting our stop loss below the last low. Remember, based on the principle of market structure, once price has this low has taken out this previous one here. This previous one is out. So this particular high that price created, we are not expecting price to come and take this one out again, right? Based on the principle of market structure. So this low is already, some people call it protected low, but me, I don't call protected low because price can decide to still come and take it out, right? But based on the principle of market structure, price is not expected to come and take it out, right? So that's where you now get your entry, putting your stop below this particular zone, and then targeting the previous high. If you are a swing trader, and let's say you spot this zone on 4-hour time frame, you can take this trade and hold it for like 2 or 3 days. It will smash your TP, right? Then this is the concept of market structure shift. That's when price is in a trend, we are not expecting that trend to break until we are not expecting that trend to take out a low. So when price is in a trend, we are not expecting price to come and take out this low, this high, this low, this high, this high, this low, this high. We're not expecting price to come and take this low out. Once price starts selling and takes this low out, what we now have is what? A change of market trend, a change of character. I hope you guys are understanding. If you're understanding what I'm saying, drop one on the chat. If you're understanding what I'm saying, drop one on the chat. Drop one on the chat. Let me know those that are following. Okay, okay, okay. That's nice. So when price is in a trend, all you just need to do as a trader is follow the trend. You don't need to complicate anything. As simple as ABC. Follow the trend. Like I said earlier, price will not look as clear. Okay, for instance, here we have this trend. Somebody here in this call now, if I ask you to mark out the zones on this chart, you're going to mark break of structure, change of character, another break of structure to the upside, another break of structure, and then just like that. But in real market, is this really a change of character? No, this is not a change of character. This is not a change of character. Why is it not a change of character? Because if you check, let's assume this is a live chart, right? You definitely see that there is an imbalance below. There is a huge gap that price needs to come and fill. Same thing is applicable here. There is a huge gap that price needs to come and fill. And price is coming to fill that gap. Price will then come to your demand zone or your demand level, right? So let's go to the practical aspect. Let's go to the chart. Let me quickly show you. Let's go to daily time frame, because as a day trader, you are looking at from a higher time frame. Let me quickly delete all this stuff. All right. So on this is GBP. So what do we want to spot on daily time frame? What we want to look at for is the market trend. So if we look at this trend, we know that these are not trend. We don't need a soothsayer to come and tell us that these are not trend markets. If you need a soothsayer, that one is for you. If you need a soothsayer to tell you the trend of this market, then that one is for you. So we can see that this market is currently what? In an uptrend. So what we have identified the current trend of this market on daily time frame, right? What do we want to do? We want to spot out the last break of structure. Once we have known that the market is in an uptrend, we are not coming here again. We are not coming all the way here to come and start analyzing. You don't need all this data. Like if I say go and make analysis on this chart now, you see some people will start from here, start marking structure from here. It's not, these things are not important. These things are only important to you if you are a swing trader. You hold your trade for like 1 week, 2 weeks, 3 weeks, right? Or even 1 month. If you're a swing trader, that's when you need all these informations, right? But as a day trader, you don't need them, because what you are needing to trade is this thing is a daily time frame, right? And as a day trader, what you just need to trade is just one of these candles you are seeing here. These are daily candles. What you need to trade here is just one of the candles you have here. So you want to make $10,000, you want to make $50,000 in a day. It's just one of these candles you have here. Just one will give you the money you need. Just one of them. So coming to go back to let's see, this is December 2023. Coming to start from December 2023 to start marking and making your analysis doesn't make any sense. Where you need to start making your analysis is at the current market movement, which is just here. This is where you need to make your analysis here. Simple. So what do you now do? As simple as ABC, you mark the current break of structure. Remember, the price is in an uptrend. So what we want to mark out is the current structure break, and which we have here, break of structure. Like I said before, price will never just move straight up. It always is moving up, but at the same time is moving sideways. You see it move, push, come back, do like this, do like this, do like this, come back, push up again. So what I want you to understand here now is this. You see all this yeye stuff that price is doing inside. You see all this yeye things price is doing here is none of your business. These things are called internal structure or internal liquidity. Whatever price is doing, let me get back to that. Don't worry, let me explain more. Let me make I'm not on the chart. Can't you see my chart? What's the issue? Are you not seeing my chart? Can you unmute and speak?
Yes, I can see now. I can see.
All right, I guess it's your network. All right, so let me quickly show you. If price is in an uptrend, price are push up and then start retracing. Anything price is doing inside, right? Except you're a scalper, you want to scalp it, right? Or let's say this is a daily time frame and you're seeing things like this, you can want to scalp, right? But all these things that price are doing here are not relevant to you. You see all these move, no matter how price want to play it, they are not relevant. What you want to expect is, what you want price to do is to come back to that your demand zone. That's where you want it to come. Or whatever it like, let it do. Even if it comes, let's say it comes here, come up, come like this, then drop down, still push up again. Whatever it wants to do, right? It's none of your business. What you are targeting is your trading range. Your trading range is this low to this high. And until price takes out either the low or the high, you're not interested in whatever thing that is doing inside. I don't know if you understand this very clear. Until price takes out either the low or the high, you're not interested in whatever price is doing. So your interest is on your zone and they swing high and they swing low, which is your trading range. Then let's go back to the chart. So if we come here, we can see that price broke structure. After price broke structure, what are we anticipating? We have our demand zone here. I believe you know how to mark your demand zone, right? Your demand zone is the last order block before an aggressive push. This candle here, this blue candle, before this aggressive candle here, before this aggressive candle, that's the order block. This blue candle here is your order block. The last candle before an aggressive push, that's your order block. Some traders, some swing traders especially, they know that this is their low. This low, but cause this break of structure, cause this high. Let me use this. This low cause this high. Some swing traders, maybe they are working class traders or people that have business that trade, they may not have time to come and stay on the chart and start waiting for market structure shift and all that, right? What they do is simple. Once they have seen something like this, they mark their demand zone and then they put their trade. They set their pending order, put their stop loss on the low. They put their stop loss on this low, knowing fully well that once price takes out this low, it means that market have shift structure, and they put their take profit on this high and then allow their trade to run. They just allow their trade to do what? To run. It's as simple. There are people that trade like this. As simple. They don't need to complicate anything. Once they mark their demand zone, price has broken structure, they mark their demand zone, they put their trade, put stop loss below. If price come and hit it out, they are done for that one. They look for another setup. So, but as a day trader and as a conservative trader, because we have two types of traders. We have aggressive and conservative. Aggressive traders are people that trade like this. Once they see their zone, they don't put their entry. They don't care what market won't do again. They don't put their trade, put their stop loss, put their TP, forget about it. So even if the trade is going to take 1 week to smash their TP, none of their business, right? But as a conservative trader, when price comes to your zone, that's when you now come and go down to lower time frame. You come to 4 hours time frame. So on 4 hours time frame, you see what price is doing here. It's not clear. Then you come to 1 hour time frame. Remember, price is on your zone already. Price is on your zone already, right? So look at what I was saying. When price is dropping, price will not drop straight. It will always form a structure. Look at it. It will always form what? A structure. Look at it. It won't just drop straight. A structure will always be formed. A structure will always be formed. A structure will always be formed. We have this last low here. Price pull back up, drop. And remember, based on the principle of market structure, please pay attention here. Let me shift this. Based on the principle of market structure, right? Hence, price have taken out this. Remember this. Let me use this. We have this high, this low, this high, and then this low. So let me delete this one. So hence price has formed this low. We are not expecting price to come and take out this high here. But what did price do? Price came and do what? Take it out. Based on market structure. Right now, you have gotten a structure shift, market structure shift. This is where you get your market structure. Remember, it's inside your demand zone. This is inside your demand zone. Take note of that. You don't come, let's say price is here, and you now come here to start looking for change of character. You will chop stop loss well. So you wait for that to happen inside your demand zone. Hence, it's inside your demand zone, either your daily demand zone, your 4 hours demand zone. You want that change of character to happen inside there. Once it happens inside here, what do you now do? You go down to, let's say, your entry time frame, which is 15 minutes time frame. Remember, as a day trader, your entry time frame should be 15 minutes. Except you want to scalp. If you want to scalp, you can then start looking for one hour. Sorry, you now start looking for, what's it called? 1 minute, 5 minutes, and all that, right? You're a scalper. But if you're a day trader, your entry should be 15 minutes. So on 15 minutes time frame, what do you want to do? What you want to do is very simple. You want to mark out the next demand zone after price have taken out this high, giving us a shift in market structure. Remember, this is the last break of structure here, POS. And then price took out the high that caused that break of structure. What do you now want to do? You see your demand zone here. Remember, the last candle before an aggressive push. That's your demand zone. Last candle before an aggressive push. So we have this last blue candle here. Then we have this aggressive push to the upside, right? Then what do you want to do? This is where you want to take your trade. You want to take your entry here, and then where do you want to put your stop loss? Because price this low here caused this change of character. Price is not expected to come and take out this low again. Price is not expected to come and take out this low again. Then you put your stop loss here. Your stop loss here. Then as a day trader, let's say you want to take profit that same day. You don't want to be holding it for a long time, or you want to take profit the next day. You can just target this level here, which is, let's say, this level. You can just target this level. But if you want to hold your trade and make money from the trade, after you have gotten your entry here, where are you targeting? The external liquidity above. This is where you are targeting. This external liquidity here. This is where you are targeting. The same place that a swing trader is targeting, putting his stop loss below, he's going to make just 1:2 point something risk to reward. But you are going to be making 14 risk to reward. You can see it here, 14 risk to reward. Let me zoom it out so that you see it very well. You can see it, 14.03 risk to reward. But an aggressive trader is going to be making, let's quickly check that. So he's going to be entering at this demand zone. This demand zone, his stop loss below, and then his take profit the same level. He's going to be making 1:2.9. 1:2.9. That means if he's risking $100 on this trade, he's going to be making $292. Why on this trade, a conservative trader, remember this one is aggressive, then this one is conservative. Why a conservative trader is going to be making 1:14? So if he's risking $100 on this trade, he's going to be making $1,400. Are they in the same level? They are never in the same level. They are never ever in the same level. This person, did he make money? Yes. This person, did he make money? Yes. Are they comparable? No, you can't compare them, because you use $100 to make $292. I use the same $100. I make $1,400. We know they're the same level. We know they're the same levels. Levels they. So this is where change of character will help you in your trading very, very, very well. I hope somebody is learning something in this class. What I'm dishing out, this is what people pay $1,000, $500 to be in the mentorship, to learn this knowledge that they give you for free. So this is where change of character plays a huge role. So let's look at the current market move. So on this current market move, I think I'll be ending it here for today. On this current market move, we have this demand zone here where price has come. Price came here, and we can see price started pushing to the what? To the upside, right? To the upside. So why did I mark two places to look at for entry? It's very simple. If we go to 1 hour time frame, let me go to 1 hour time frame so that our chart will be more neat. If we go to 1 hour time frame, right, we have this break of structure here. So there are chances of two things happening. Then we have this demand zone here below. So this demand zone here is created as a result of this change of character. See this low was swept, and then we got a break of structure here, which is a change of character to the upside. A change of character to the upside, right? So this particular low caused this change of character, and price came very low but did not tap it. You can see it was remaining very little for price to tap it, but price wasn't able to tap it, and then price started pushing up. So right now, price gave us a break of structure here using this demand zone. Using this demand zone here, price used this demand zone to give us a break of structure. So I'm expecting two things involved here. It's either price retrace, tap on this demand zone, because we see we have imbalance and then we have this demand zone, and this demand zone has not been mitigated. Mitigation means candle have not touched it, candle have not touched it, right? So I'm expecting price to tap on this demand zone, continue to the upside, or come back to this one, because we still have imbalance and then we have this demand zone that price have not tapped. So that's why I'm expecting price on these two levels. So each anyone that price reacts from. So once price comes here, I'm definitely going to go to like 1 minute time frame or 3 minutes time frame to look for a change of character too. If I don't see a change of character, then I will know that price is going to break it and come down. Then once price comes down here, you cannot take your trade. You don't even need to go to 1 minute or anything. Just take your trade and anticipate price to go up. So that's my anticipation. That's my analysis on this Euro NZD, and I'm giving it out for free. You can make a screenshot of it. Wait for it if you want to trade it. That is it. So if you have any question, fire down. Let me open the box for question. If you have any question, you can go ahead and ask. Let me pick a few questions as we be ending the call. If you have any question, just unmute and speak. If you have any question, you can unmute and ask your question, or you can drop it on the chat box. Anyone. All right. Nobody has a question. That means you guys really understand what I have explained. All right. So we are going to be ending the class for here. Meanwhile, I have the recording of the class in case you want to rewatch. I'm going to be updating it on YouTube. You can access it later. All right, guys. Thank you so much for your time. Do have a wonderful, wonderful, wonderful day. Take care.